I've made quite a few statements about that. I've received quite a bit of backlash from the crypto community about that. But yeah, I would say categorically, I don't think we'll see another crypto bull run. The reason I would say crypto as a category had its last bull run is because of what's happened with FTX and the potential regulations that are coming in. So we have a real technological revolution happening, and that is decentralization. All of the cryptocurrency assets, because they can't be more decentralized than Bitcoin, they try to innovate on something else. The problem is the innovation isn't something else. The innovation is the decentralization. You know, the Max Keisers of the world, like, we're on a different mission. Like, this is a decentralized revolution that will literally change the world. So if Bitcoin could just capture 5% of that, which I think is totally reasonable, that's $35 trillion market cap, divided by 21 million Bitcoin, brings us to almost $2 million per Bitcoin. And I think we could be there by the end. It's been a wild ride this year. As somebody who kind of commentates on and digests the news, it's definitely kept us busy. So it's been a wild ride, but I still have high hopes, and I still feel pretty optimistic about the future. So a long-term secular trend has changed, and so we've seen bond yields have bottomed out and stock markets have topped out, and they're both reversing off of that, or I should say the interest rates. So the interest rates, bottomed at 0 and they're bouncing back up. Long-term secular trend is broken. We're now rising, and like I said, stock valuations are coming back down. But I think more than that, it's really the shift at the Fed itself. And so, of course, Jay Powell said that they weren't thinking about raising rates, and then they wouldn't raise rates for 4 years, but that was like 2 years ago. Now he's saying that they're going to keep rates high for a lot longer. Being a Bitcoin person, I've heard 1,000 times, or maybe 1,000,000 times, that the central banks or the governments will never allow something like Bitcoin to happen because they don't want to give up control over the money, which of course is a great argument, and there's a lot to that, and we can unpack that. But I would somewhat agree with that. They don't want to give up control over the money. But if that's true, then does the Fed, Jay Powell, want to give up control over the dollar to the ECB? To the BOJ, to the Ruble. And so we have all these different factions that I see that are kind of fighting, and it looks like the Fed really wants the dollar to remain strong. And Jay Powell's been very clear. He doesn't care about your retirement account. As a matter of fact, he wants it to come down. He doesn't care about the value of your home. He wants it to come down. And even worse than that, you making a good wage is a problem for them. And so we have these constraints, and I believe this is why the market is somewhat calling the Fed's bluff. And so, Jay Powell goes, hey, you didn't listen to me correctly. There's going to be pain. I don't know why you guys think this is bullish. This is going to be bad. But the markets are somewhat calling their bluff because of maybe what Rick Rule is seeing is we understand the natural constraints that the Fed and the governments are in. They are going to have to print money. I just think that they're going to continue to push the pain longer than most people. And then eventually, of course, sure, they're going to pivot. They're going to blow this thing sky high. Things are going to crash bigger, faster, deeper than they thought they would, a la March 2020. Yeah, so for 2023 and kind of maybe for the next year or two, the sectors I'm looking at, I think obviously commodities, real things, energy, right? Those are the big buckets. Gold appears to have bottomed out. It's done really well over the last 30, 45 days. And we're seeing real things that I think we're going to do really well. I think equities are going to continue to trend down. I think equities, specifically around the tech stock equities, are going to continue to do horrible for the next couple of years. I've made quite a few statements about that. I've received quite a bit of backlash from the crypto community about that. But yeah, I would say categorically, I don't think we'll see another crypto bull run. So, what somebody like myself, maybe as you said, a Bitcoin maximalist, but a Bitcoin person, we're very clear to say Bitcoin, not crypto. Not saying that Bitcoin isn't a cryptographically secured currency. It's not a cryptocurrency. It's just that when we talk about Bitcoin, we're talking about Bitcoin, and when we talk about crypto, we talk about crypto, but we don't interchange those two. One of my favorite analysts, Lynn Alden, said, to confuse Bitcoin and crypto means you understand neither. And so it's kind of like that. And so when I say that crypto as a category, I'm making the claim that it won't see another bull run as a category, but I believe it's massively bullish for Bitcoin.
Okay.
So I believe Bitcoin will go on to another bull run, and even a bigger bull run than it might have gone on before once we get rid of the crypto piece. Now, Jack Mallers said that crypto is an arbitrage on the trend. an arbitrage on the trend. So we have a real technological revolution happening, and that is decentralization. All of the cryptocurrency assets, because they can't be more decentralized than Bitcoin, they try to innovate on something else. The problem is the innovation isn't something else. The innovation is the decentralization. And so you could look at all these other crypto assets sort of like a DDoS attack or like a denial of service attack against Bitcoin. Where in a denial of service attack, you'd have spam that would flood a server that would kind of prevent it from doing what it needs to do. And Bitcoin is sort of the same way. And so all of these investors, they think, oh, we're just trying to make more US dollars. And so this one could go up more or faster than Bitcoin. So I'll buy that instead. And of course, all assets move, all prices move on supply and demand. So Bitcoin has a supply cap of 21 million. If more people buy it, more demand, that pushes the price up. But the 1,000, 5,000, 10,000, now 22,000 crypto assets pull the demand away from Bitcoin because most people are not educated enough to understand what's going on. And they go, oh, this is the next Bitcoin. I can make money on it. I can make more US dollars. Whereas Bitcoiners, and I know you have many of them on as well, you know, the Max Geisers of the world, like we're on a different mission. Like this is a decentralized revolution that will literally change the world. We've solved the oldest problem in humanity, which is how do I custody my assets in a way that can't be manipulated, stolen, and if I want to transfer it, it's censorship resistant. And so we've solved that problem, and it's a big deal. It's a big deal that's going to create a lot of value, more value than we could ever imagine, and most people just don't understand that piece. The reason I would say crypto as a category had its last bull run is because of what's happened with FTX and the potential regulations that are coming in. So you first have to understand how crypto as a category works. And so Sam Bankman-Fried gave an interview earlier this year, I believe in May, with Joe Weisenthal and I forget. And he explained, he said, let's say that you create this box, and then this box is like this world-changing protocol. And then you create this box token, and then you trade this thinly traded box token to make it have a perceived value, and then you let other people start trading it. And so he kind of highlighted the way cryptocurrency works. And so the crypto market as a category blew up because venture capitalists love it, because traditionally they would have to invest into a venture capital fund, wait 10 years for a liquidity event. But today, or in the last couple of years, they've been able to invest into these crypto assets where a creator would create this box token, as SBF called it. And this venture capital would be able to come in and buy these box tokens for 3 cents and automatically turn and flip them for 9, 12, or 26 cents into the market. Then they started pushing all the media, the advertising, the Super Bowl ads. And so it created this massive buzz. And everybody loved it. As SBF said in that interview, first they trade it with Alameda to give it perceived value. Then they advertise it. And then the market, retail, jumps in and think there's something there, even though there's not. Mm-hmm. And I know that may sound cynical, and his interview was cynical, but that's the way the majority of crypto, not the majority, all of it worked. I believe all but I think 4 or 5 cryptocurrencies, all the other ones had a pre-mine and a token sell. All of them worked that way. And so the reason why I would say as a category won't have another bull run is because I believe that now the SEC, the CFTC, Congress is going to be forced to act.
Yeah.
The SEC is there to protect consumers. They have obviously failed. Elizabeth Warren and Maxine Waters are all calling for regulations. They're coming. And a lot of people push back on this, and they didn't like when I said that because they say, Mark, you don't understand.
Right.
If the SEC regulates this, these tokens will just go offshore. They can't stop innovation. And I agree, right? They can't stop innovation. But if these tokens go to these offshore jurisdictions with no SEC oversight, the U.S. venture capital companies are not going with them. That money is not going. If it goes into a regulated space where these tokens have to go through regular securities, registrations, it just changes the landscape. So I'm not saying it goes away, but I think the days of 2017 and 2020, 2021, where the entire market cap went up and you could close your eyes and throw a dart, I think those days are over. Well, I would say that FTX orchestrated the takedown of Terra Luna, which then took down Celsius, which then took down 3 Arrows Capital, which then ultimately weakened FTX. Did Binance, potentially cause something because they said they wanted to sell their tokens? Maybe, maybe not, but I would say that we don't have any fact of that, but I would say that FTX started this problem, potentially, and they caused their own problem because of their sham of a balance sheet. And so if FTX said they want to sell the token and they had the money to back it up, it wouldn't have been a problem. Yeah, and not just Block, but even bigger than that. We saw that I believe advertising lost 6% of its revenue from cryptocurrency dropping out. So all the ads that we see, all of that, and yes, to the point that you're talking about with Block, it's very hard to know who to trust, and not just in cryptocurrency space, but overall. And so that's a tough question, Danielle. I would say, practice critical thinking, which is something that we've seemed to lose. Back to Bitcoin, the whole point with Bitcoin is trust. Don't trust, verify. And because it's an open source network, nobody controls it. We don't have to worry about things like that. And I still like gold. I think, gold is very compelling from many standpoints, especially as an investor. I just think that it doesn't work in the information age, and Bitcoin is better because of that, and for many other reasons. Bitcoin is going to be lots of other things than we know today because it's just a revolution. But what we do know today is it's the best pristine collateral. It's the best asset because of the fact, like I said, it solved the problem where I can own it, nobody can manipulate it, and nobody could seize it, steal it, etc. So if we just add up those big categories, and we'll just stick there, we're at about $700 trillion of store of value assets. Store of value assets. So if Bitcoin could just capture 5% of that, which I think is totally reasonable, that's $35 trillion market cap, divided by 21 million Bitcoin, brings us to almost $2 million per Bitcoin. And I think we could be there by the end of the decade. The big money's made in the waiting. And so just think about that as we go into the next year. Make some moves, pay attention, but be patient, because I think we're probably going to have more pain going through most of next year. Probably by the end of next year, we'll be coming out of it. Yeah. But just be patient and wait.